Good morning. Thursday, April 17th. Zach Howard here. Global market update. Yesterday, Bank of Canada policy decision held where they're 2.75 on that Bank of Canada rate. 50-50 coin toss on if they were going to cut and kind of give guidance that they see slowdown in the back half of 2025. Based on the key theme, uncertainty. Look at the policy press release and I guess commentary post decision from Bank of Canada head. Uncertainty. Markets and uncertainty, like I say, they don't go together very good like oil and water. But let's look in that 5-year Canada bond yield, kind of saying where we go from here, chop wood until we have further clarification on policy decisions. We start to see this 5-year yield break down below 260, 250 again. That's going to indicate that they're going to accelerate their cuts. But look at this chart, seasonality listings in the greater Toronto area. This is what matters to the country. What happens in TO, BC, that's how governments get elected, not so much in Eastern Canada, where our housing market looks pretty good. These things are through the roof, and these people here are having a bunch of renewals on their mortgage that they took out 5 years ago when rates were pretty much 1.95 or thereabouts. So they're getting a sticker shock. So I would expect yields to continue to fall in the latter part of 2025 in Canada. Let's look at this great chart here from WOW. They do a lot of good economic data as it relates to Canada. It's the CPP, a Canada Pension Plan's distribution of assets and performance since the last 25 years. If the CPP had just parked all the money in physical gold, not all the fancy analysis, all the management fees, all the 401 10Ks, 10Qs having to review, they would have outperformed. Gold rises with the money supply in terms of performance. The thing that kind of stands out to me is how much exposure they have to private equity. 19% 25 years ago, and now 31% of the Canadian pension plan's assets is in a market that you can't really get a mark to market on the real value of these assets. And I think a lot of them are inflated. Private equity might be one of the biggest bubbles out there. Kind of scary. It should have just put more money in gold. Ways I'm looking to play the slowdown globally and the risk off mode, as opposed to just shorting equities. Looking at shorting that high yield market. There's some ETFs out there that you can get a positive carry by just putting your money there and waiting for this to continue to be a stressful asset class and that junky debt, high yield debt. And as we continue to see stress around the world, liquidity will dry up in that type of the credit space. This is what my notebook looks like to end the week. And if you're voting red in the Canadian election or in money in markets, not a color you want to have your spot on. Not a lot of blue out there. Standouts continue to be gold. Look at this here. Volatility in the VIX, gold miners, silver. Other than that, there's a lot of red across the board. I hope you guys have a great Easter with your families, and I will see you on Monday. Have a great weekend.